All right, welcome to the Explainer. Today, we're diving into a tool that's all about taking one of the trickiest things out of crypto trading. You guessed it, your own emotions. We're going to break down the Pionex grid trading bot. So let's get into it.
So let me ask you something. Have you ever been there? You're staring at the charts, your heart's pounding, you're trying to figure out the perfect time to buy or sell, and then bam, the market does the exact opposite of what you wanted. It's super stressful, right? And it almost always pushes us into making those emotional, knee-jerk decisions.
Yeah, and that right there, that's the real problem, isn't it? It's like our own emotions become our biggest enemy when the market gets choppy. You know that fear of missing out, or that urge to panic sell? It can totally wreck a perfectly good strategy. And that emotional roller coaster is exactly what trading bots are built to fix. So, what's the solution? How do you actually get your emotions out of the driver's seat? Well, the answer is automation. The whole idea is to swap out those gut feelings and frantic clicks for a calm, logical strategy that just works. It runs for you 24/7. Okay, so what exactly is a grid trading bot? Well, when you boil it all down, it's a pretty simple but really powerful idea. It's basically a little program you set up, and its only job, its entire purpose, is to buy low and sell high. That's it. It does this over and over, all on its own, inside a price range that you get to decide. So how does this thing actually do its job? It's pretty cool. First, you tell it, okay, I only want you to trade between this low price and this high price. That's your range. Then the bot just fills that space with a bunch of buy and sell orders. Think of them like rungs on a ladder. They call this the grid. Now, if the price drops and hits one of those lower rungs, the bot buys. If the price climbs and hits a higher rung, it sells. It's just a super disciplined way to try and make a profit from all those little ups and downs. All right, setting one of these up might sound a little complicated, and honestly, it can be. But Pionex has a really simple way to get started. Let's talk about their AI strategy, because if you're new to this, it's a great place to begin. So what's the secret sauce with this AI thing? Well, instead of you having to pull numbers out of thin air, the system does the heavy lifting. It looks back at the last 7 days of market action, all the ups and downs, and then it just tells you what it thinks are the best settings to use. It recommends the price range, the grid setup, everything, all based on that fresh data. And really, it all comes down to this. When you use the AI strategy, pretty much the only big decision you have to make is, how much money do I want to put in? That's it. The system takes care of all the other tricky stuff for you. So, you've basically got two paths you can take here. You've got the AI strategy, which is the easy button, perfect if you're just starting out. And then you have the manual settings, which is for the pros, the people who want to get under the hood and tweak every single detail themselves for total control. But hey, what if you're one of those people who doesn't want the AI calling the shots? Well, if you've got your own strategy worked out and want to be in complete command, then manual control is where it's at. So when you go manual, there are 4 main things you've got to decide. First, the upper limit price, that's your ceiling. Second, the lower limit price, that's your floor. Then you decide on the number of grids, which is just how many of those buy and sell orders you want. And finally, of course, your total investment. And if you really want to get precise, you can go even deeper. There are advanced settings for things like a trigger price, which tells the bot, hey, don't start working until the price hits this number. You can set a stop loss to get you out if things go south, or a take profit to cash out your winnings automatically. You can even fine-tune stuff like slippage and choose between different types of grid setups. It gets pretty detailed. Okay, I know. All these settings can sound a bit theoretical, so let's make it real. Let's walk through an actual example to see how this all clicks together. So, let's say we're trading ETH against USDT. For our setup, we're going to set a really wide price range, a low of 1,000 USDT and a high of 10,000. Inside that huge range, we'll set up 500 grids, and we'll put in 1,500 USDT to get the whole thing running. And boom, as soon as you create it, the bot is live. It'll immediately start buying some ETH at whatever the current price is, and it'll set up sell orders above that price. The rest of your USDT is kept ready to place buy orders below the current price. From that moment on, it just does its thing, buying when the price steps, selling when it rises, all within that big $1,000 to $10,000 playground you gave it. Okay, this all sounds pretty amazing, I know, but we gotta hit the brakes for a second. It's super important to understand that this is not some kind of magic money printer. There are real risks involved, and you absolutely have to know what they are before you even think about starting. So what can go wrong? Well, first off, if the price shoots way up or crashes way down, completely leaving your price range, your bot just stops trading. It goes dormant. Another thing, if the price goes on a massive bull run past your upper limit, you'll have sold everything way too early and you'll miss out on all that upside. Then there's the opposite problem. If your grids are set too wide and the price is just making tiny little moves, your bot might not do anything at all. And of course, you've got outside stuff, like if a coin you're trading gets delisted, that'll shut the bot down automatically.
And this is a really key point. What happens if the market tanks and the price drops below your range? Well, your bot will have been buying crypto on its way down, and now it just holds it. So you're basically left holding the bag. It's an unrealized loss at that point, and it only becomes a real loss if you decide to sell at that lower price, or if your stop loss kicks in.
So where does that leave us? On one hand, you've got tools like this GridBot that offer a totally systematic, emotion-free way to trade in these crazy markets. But on the other hand, as we've just seen, they're not a set-it-and-forget-it solution. They need a solid strategy and a real respect for the risks. Which brings us to the big question. Could this kind of disciplined automation really be the key to taming market volatility?